figure out after we get through the first couple quarters of the next iPhone.
Continuing to benefit from an increase in, Apple services. You see that peaking, or at least not, grow as fast anytime soon?
Well, we do have the growth slowing a little bit, but it's really not a function of our expectation that things are getting weaker or anything in that services business, but they grew revenue in the segment 22% in the quarter, which was the highest that we've seen in the last couple quarters at least. And we do think that's going to kind of trend into the mid to high teens over the next few quarters. But, a lot of that's going to be dependent on, back to what I was saying on augmented reality, if they've created an ecosystem of AR applications that really captures consumer interest in using those in conjunction with the new phone, then there's opportunity for, I think, upside for the services business over the next few quarters. We'll have to see how that plays out.
Doing some research for our call here, I was looking at an update on China, and I saw that, and I'm not going to quote this verbatim, but that Apple's a number 4 smartphone brand there, behind a few other products. Government regulation increasing, sales growth declining over there. A lot of motivated local rivals, gunning for Apple here. Give us an outlook on the China situation.
Yeah, it hasn't been good. I mean, they've been losing market share. Revenue's been declining, and I think a big issue that they faced is that a lot of the China-based manufacturers are simply ahead of the game as far as new features and functionality in the phones that they're offering. So if you're using it as a strong functional device, or if you're using it as like a status symbol, Apple hasn't kind of kept up with their competitors in China. And I think the opportunity with the next gen iPhone, at least the high-end version that could have a lot of additional functionality that is getting them back on par with China-based manufacturers, if not surpassing, as well as a higher price point, ironically may drive more interest as a kind of a status symbol. So I think that all of those things combined could help to gain back some share over the next 12 months in China.
Okay, and just as far as how they're doing in other places besides China and the United States.
Yeah, I think outside of China, the rest of the international market is very similar to the U.S. We're seeing solid trends in those markets, and I think again will be catalyzed to some degree with the next gen iPhone as it comes out.
Okay. And the watch, updates on the watch. I mean, you think that Wall Street's just kind of giving them a pass on that? There was a lot of anticipation, not exactly sure what the sales are. Just give us your outlook and your evaluation of Apple Watch, iWatch.
Yeah, they did say it was up 50% year over year in the June quarter. So that's obviously a good trend. I think, to answer your question, really the street has kind of given them a free pass, and what could have been a new category of innovation, as we were talking about earlier, has maybe not proven to be the case, in the sense that it is a new category of innovation, but it's not going to be kind of transformative or material to the overall business. I mean, the real issue that Apple has right now as far as creating new categories of innovation that can be material to revenue is, how do you kind of internally compete with a product that essentially commands 80% of your revenue? If you look at iPhone, between actual hardware sales plus the services business, which is largely iPhone related, you've got 80% of revenue coming from one product.
Okay, and the Siri Alexa battle there, they seem to be kind of on the short end of the stick on that one. Any comments on that?
Yeah, I think, similarly, it's potentially a new category of innovation, but not one that the street has a lot of confidence in. I think really when people are looking at where Apple can be differentiated, over the next few years, it's increasingly turning towards what can be incremental within the iPhone and what can drive this creation of an augmented reality ecosystem.
And your price target for Apple?
Yeah, we're at $190 price target, which we raised this morning, and that is a 15 times 2018 EPS plus their net cash per share.
Okay, let's just touch on a few other stocks before we let you go here. A stock not doing too good off its report. Amazon missed by $1 there. Revenues were okay. Just give us, your technical outlook here. Seems to be, hanging towards $1,000 above and below its less at psychological level here. Just give us a quick review of the Amazon report.
Well, the growth was very strong, and I would just say it comes down to they're putting it very simply. They're selling more stuff, but it's proving to be at a lower margin as they invest in the business. So I would just say, to summarize, world domination is expensive, and Amazon really isn't backing off on its strategy to invest in a way that widens the gap between itself and its competitors. And meanwhile, the company is adding new addressable markets that total in the hundreds of billions. So that all takes significant investment. And really, historically, these selloffs in Amazon related to margin weakness have been a gift. And buying on these pullbacks has proven to be a solid strategy over time.
And more acquisitions for Amazon down the line. They took out the Whole Foods, getting into after they destroyed brick and mortar. Now they're getting into brick and mortar. Any comments on the Whole Foods takeover?
Well, yeah. As far as other acquisitions, it's hard to say. I think there's nothing kind of obvious sitting out there, but Whole Foods wasn't obvious either. So I think you never know with Amazon. But I would just say, as far as the acquisition, we're confident in it. We're optimistic. We just published a survey yesterday of a little over 1,300 U.S. consumers that shows 16% of consumers are interested in using grocery delivery this year. So I think the perception is that it's a tiny fraction, some single digit or low single digit percentage of consumers that are interested in grocery delivery, but 16% now, and Amazon has the opportunity to be a beneficiary of that, but they also have the opportunity to be kind of a leader in creating a more ubiquitous offering for grocery delivery.
My wife and I are part of that. Well, we're already actively doing it, and it's very, very convenient through Myers, which is a local chain in this area. One more stock before we let you go. Another good report from Netflix. Increasing users hit 191.50. That was a couple days after the earnings run, and now we pull back. We're holding back at the $180 level. Just give us your target. Any comments on Netflix?
Yep. So Netflix, our price target is 198, and they obviously continue to perform well. And we believe there's a huge opportunity to capture more international subscribers. The company has nearly 50% of U.S. households, and if you look at internet subscribers, we think Netflix will be at over 60% market share in the U.S. by 2020. But we only assume 12% share of international internet households by then if you exclude China. So there's potentially room for that to be materially higher over time. And the other thing is our model assumes margins internationally are well below U.S. levels by 2020, and that could prove to be overly conservative given the cost of content internationally should be lower than the U.S., as the U.S. is really the most competitive market for content acquisition.
We've been on the line with Mike Olson. He's managing director and senior research analyst at Piper Jaffray. Mike, thanks a lot for coming on. A lot of great information here for our listeners, and I'm sure we'll be dialing you up here for the next Apple report. Thank you, and have a great day.
Thank you.
S&P futures up 2.5 here at 2474.75. Your high 76 even. There's a few other highs at this area as well. The all-time high in the S&P futures is 2480.50. Our all-time closing high, which may be going by the wayside today, that's 2474. Well, folks, thanks for do the show with us?
I wanted to get one more. Did we do SodaStream?
No, we did it.
Didn't? Okay.
That's popping. Let's do SodaStream.
Do you remember my SodaStream story? How I bought one as a gift for my mom, and then she made me return it because she was like, "Who would use this? Who would use this?" So I had to return it.
All right. Well, give me the earnings report.
Right. Sorry about that information. 64 cents versus a 54-cent estimate, so a 10-cent beat there on the EPS. Sales of 130 versus 128 million dollars.
All right, soda. We'll just use that pun again. Getting a nice pop, but we've pulled back. Now we are now in the red here. We hit 59 even on that headline number. Pre-market low is well into the 56 handle. You have actually 55 even as your pre-market low. I'm looking at these three lows you had right around here from 56. We're trading at 55 and a half. So get back above 56 here. Have a chance on this one coming back on the downside. As I mentioned, your pre-market low is 55 even, and then under 55. A lot of air in this thing. Next daily level comes in at 53.84. That was your July 17th low. Spencer, what's on the docket?
On the docket for tomorrow, Joel, one of your old favorites, Harlan Pine. Amazing Power Patterns is his site. He'll be joining us tomorrow to give us his amazing power patterns, I would assume. So that's our show for the day. Thanks for sticking with us, folks. We'll be back with you tomorrow, same time, same place. Have a good one.